Hey everyone, welcome back to Corporate Decoder. Today ADGM just filed a notice of non-compliance with Nasdaq listing rules, and I am seeing one red flag that matters. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is facing a serious challenge to stay listed on the Nasdaq, and its path forward looks pretty tough. Alright, let's dive into what is going on with Adagio Medical Holdings, ADGM. They've just submitted a current report on Form 8K, which basically means something important happened that shareholders need to know about right away. The earliest event reported here is the 13th of August 2026, and what happened on that day is the company received a letter. This letter came from the Nasdaq Stock Market's Listing Qualifications Department. It is essentially a warning shot saying Adagio Medical is not meeting one of the key requirements to stay listed on the Nasdaq capital market. The specific rule they've fallen out of compliance with is the minimum stockholders' equity requirement. Think of stockholders' equity as the company's net worth, the money left over, if all its assets were sold and all its debts were paid off. Nasdaq requires companies on the capital market to have at least $2.5 million in stockholders' equity. And here is the kicker. The company's most recent quarterly report showed their stockholders equity was actually negative $415,000 as of the 30th of June 2026. So they are not just a little bit short, they are on the wrong side of the ledger, meaning they owe more than they own. Now, there are a couple of other ways companies can stay listed on Nasdaq if they don't meet the equity requirement. They can have a minimum market value of listed securities of $35 million or achieve a certain level of net income. The report explicitly states that Adagio Medical does not meet these alternative standards either. This means the negative equity is the primary issue they need to address to stay listed. But it is not lights out just yet. Nasdaq is giving Adagio Medical 45 days to come up with a plan to fix this. They have until the 28th of September 2026 to submit what is called a compliance plan. If Nasdaq staff likes this plan, they might give the company an extra 180 days to actually get that stockholders' equity back above the $2.5 million mark. This is a common procedure, but it hinges entirely on Nasdaq approving their proposed solution. Adagio Medical says they intend to submit this plan by the deadline, and they will be keeping a close eye on their equity and exploring all options. This is where it gets really interesting because with negative equity, what are their options? They likely need to raise significant capital either through selling more stock or finding new investors. Now, when we look at the forward-looking statements section, this is where the company talks about their hopes and plans for the future. They mention their intention to submit the compliance plan, monitor their equity, and evaluate options. But they also lay out the risks. These include their ability to actually regain compliance, the possibility of needing more time, and critically their current liquidity position and the need for additional financing. They also explicitly mention their need for additional capital to continue operating as a going concern. That last part is a huge flashing red light. When a company says it needs money to continue as a going concern, it means there is a real question about whether it can survive in the near future. Looking at the context from recent news, Adagio Medical Holdings, ADGM, recently reported their Q2 2026 results. And it wasn't pretty. They posted a loss and warned about their cash runway, which is essentially how long they can operate before running out of money. This recent news perfectly explains why they are in this predicament with their stockholders' equity. It seems the core business is struggling to generate enough profit or equity to meet listing requirements. The fact that they are already warning about their cash runway and now facing a Nasdaq delisting notice paints a concerning picture. Companies facing these kinds of delisting warnings, especially with negative equity, have a tough road ahead. Historically, about half of microcap companies that go through reverse splits to try and boost their stock price end up delisted anyway. While this isn't a reverse split filing yet, the underlying problem of insufficient equity in cash is similar. A comparable might be something like Bed Bath & Beyond or Tupperware, which have faced significant operational and financial challenges impacting their stock exchange listings. For a $1,000 investment in a company in a similar situation, the risk of losing a significant portion, perhaps 50 to 70%, over the next year due to ongoing financial distress and potential delisting is quite real. The report is signed by Deborah Castor, their Chief Financial Officer and Chief Business Officer. It is their responsibility to manage the company's finances and business strategy, and she is signing off on this notification. In my opinion, Adagio Medical Holdings is in a very precarious position. The negative stockholders' equity is a critical indicator of financial distress. While they have a plan to try and rectify this, the need for additional capital and the warning about operating as a going concern are major red flags. The risk I am watching is whether they can secure the necessary funding to not only regain compliance, but also to fund their operations and keep the business afloat. My biggest concern is the fundamental inability of the business to generate sufficient equity from its operations. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.